ExamPrep.School. NC Casualty Insurance Exam, exam code InsNC-Cas05. There are 5 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Commercial insurance coverages, North Carolina statutes and regulations, pertinent to casualty, personal insurance coverages, terms and concepts. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. In casualty insurance terminology, which statement most accurately distinguishes the concept of risk from that of peril? A. Risk denotes the uncertainty or probability of a loss occurrence, whereas peril identifies the specific cause or event that triggers the loss. B. Risk indicates the magnitude of potential financial loss, whereas peril denotes the probability of a covered event occurring. C. Risk represents the insurer's assumption of liability, whereas peril describes the underlying hazard characteristics of the insured property. D. Risk refers to actual financial exposure at the time of loss, whereas peril signifies the class of assets or persons protected by the policy. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The correct answer differentiates risk as the probability of loss and peril as the specific cause of the loss event. Reason B is not correct. This incorrectly reverses the definitions by linking risk to loss magnitude and peril to probability. Reason C is not correct. This option confuses risk with insurer liability assumption and misattributes peril to hazard characteristics. Reason D is not correct. This misdefines risk as actual exposure and peril as the protected subject rather than the cause of loss. Question 2. Which description correctly pairs each type of hazard physical, moral, and morale with its definition in casualty insurance? A. Physical hazard arises from tangible characteristics that increase loss likelihood. Moral hazard stems from deliberate dishonesty or fraudulent intent. Morale hazard results from carelessness or indifference due to an attitude. B. Physical hazard emerges from an insured's negligent behavior. Moral hazard derives from concealed external conditions. Morale hazard involves intentional misrepresentation for gain. C. Physical hazard involves intentional acts causing damage. Moral hazard pertains to the physical environment's risks. Morale hazard is linked to the severity of potential financial exposure. D. Physical hazard is the insurer's evaluation of risk severity. Moral hazard represents the probability of loss. Morale hazard signifies the actual financial outcome of a claim. The correct answer is A. This option accurately distinguishes physical hazard as a tangible condition, moral hazard as insured dishonesty, and morale hazard as careless attitude. Reason B is not correct. This misattributes physical hazard to negligent behavior and misdefines moral and morale hazards. Reason C is not correct. This incorrectly assigns intentional acts to physical hazard and confuses moral hazard with environmental risk. Reason D is not correct. This wrongly links hazards to insurer assessment and financial outcome rather than true definitions. Question 3. After a residential fire, an insured's policy reimburses the actual cash value of the damaged structure accounting for depreciation rather than the cost to replace it. Which insurance principle is being applied? A. Principle of indemnity. B. Principle of subrogation. C. Principle of insurable interest. D. Principle of proximate cause. The correct answer is A. The principle of indemnity limits recovery to the actual economic loss, preventing the insured from receiving more than the depreciated value of the property. Reason B is not correct. Subrogation allows the insurer to pursue third parties for recovery, but does not determine the valuation method of the loss payment. Reason C is not correct. Insurable interest requires that the insured have a financial stake in the property at the time of loss, but does not dictate how depreciation is applied. Reason D is not correct. Proximate cause identifies the event that sets off coverage, but does not address reimbursement limits or depreciation. Question 4. In negligence law, the concept that limits a defendant's liability to harms that are a reasonably foreseeable consequence of the negligent act is known as A. Strict liability, B. Cause in fact, C. Proximate cause, D. Res ipsa loquitur. The correct answer is C. The correct answer is proximate cause because it limits liability to harms that are reasonably foreseeable consequences of the defendant's negligent conduct. Reason A is not correct. Strict liability imposes liability regardless of fault and does not involve foreseeability. Reason B is not correct. Cause in fact establishes actual causation but does not include the foreseeability limitation. Reason D is not correct. Res ipsa loquitur is a doctrine for inferring negligence from circumstances, not a causation element. Question 5. Punitive damages, as distinct from compensatory damages in negligence claims, require proof that the defendant A. Incurred measurable economic loss for the plaintiff, B. Committed a breach of duty that was foreseeable, C. Acted with malice or gross negligence, D. Had a pre-existing contractual relationship with the plaintiff. The correct answer is C. The correct answer is that the defendant acted with malice or gross negligence, which is required for punitive damages to punish and deter wrongful conduct. Reason A is not correct. Economic loss is relevant to compensatory damages, not punitive damages. Reason B is not correct. Foreseeability relates to causation analysis and does not satisfy the punitive damage standard. Reason D is not correct. A contractual relationship pertains to contract claims, not the basis for punitive damages. Question 6. During a slip and fall at a retail store, a customer suffers a sprained wrist, the customer's smartphone is damaged when it falls to the floor, and the customer later files a lawsuit alleging the store manager published false statements injuring the customer's reputation. According to standard liability policy definitions, which classification is correct for each claim? A. Sprained wrist is bodily injury. Smartphone damage is personal injury. Defamation lawsuit is property damage. B. Sprained wrist is bodily injury. Smartphone damage is property damage. Defamation lawsuit is personal injury. C. Sprained wrist is property damage. Smartphone damage is bodily injury. Defamation lawsuit is personal injury. D. Sprained wrist is personal injury. Smartphone damage is property damage. Defamation lawsuit is bodily injury. The correct answer is B. The correct answer classifies each loss under a liability policy. A sprained wrist is bodily injury because it involves physical harm. Damage to the smartphone is property damage since it harms tangible property. And a lawsuit for false statements harming reputation is personal injury. Reason A is not correct. Smartphone damage is a property damage loss, not a personal injury loss. Defamation is personal injury, not property damage. Reason C is not correct. A sprained wrist is bodily injury, not property damage, and smartphone damage is property damage, not bodily injury. Reason D is not correct. A sprained wrist is bodily injury, not personal injury, and defamation is personal injury, not bodily injury. Question 7. In a commercial general liability policy, the declarations page provides all of the following except A. Effective dates of coverage, B. Description of insured locations, C. Total policy premium, D. Duties of insurer and insured. The correct answer is D. The correct answer is that the duties of insurer and insured are specified in the conditions section, whereas the declarations page shows coverage dates, insured locations, and premium. Reason A is not correct. The declarations page always lists the effective policy period, so this choice appears there. Reason B is not correct. The descriptions of insured locations are included on the declarations page. Reason C is not correct. The total policy premium is shown on the declarations page. Question 8. Utility Services, Inc. holds a commercial general liability policy under which Roadworks, LLC is named as an additional insured. Following a covered accident, Roadworks, LLC tries to cancel the policy, but the insurer denies its request, stating that Roadworks lacks authority to do so. Which of the following best explains why the cancellation attempt failed? A. The additional insured may cancel only its own coverage, leaving the policy intact for the named insured. B. Only the first named insured is authorized to cancel or non-renew the policy under standard contractual provisions. C. Cancellation of the policy requires agreement from both the first named insured and the additional insured. D. Cancellation rights automatically transfer to an additional insured upon issuance of the additional insured endorsement under the policy. The correct answer is B. The correct answer is that only the first named insured has authority to cancel or non-renew the policy per the policy's standard cancellation provisions, and such rights are not granted to additional insureds by typical endorsements. Reason A is not correct. This is incorrect because additional insureds do not possess unilateral cancellation rights. Only the first named insured can terminate the policy. Reason C is not correct. This is incorrect because cancellation does not require consent from additional insureds. Authority rests solely with the first named insured. Reason D is not correct. This is incorrect because issuing an additional insured endorsement does not transfer cancellation rights to the additional insured. Question 9. According to the North Carolina personal auto policy definitions, which of the following is considered a covered auto? A. A rental car used by the insured for business purposes. B. A pickup truck with a gross vehicle weight rating of 8,000 pounds owned by the insured. C. A vehicle with fewer than 4 wheels owned by the insured. D. A vehicle with a gross vehicle weight rating of 12,000 pounds used by the insured. The correct answer is B. The correct answer is a pickup truck owned by the insured with a GVWR below 10,000 pounds because the policy defines covered autos as private passenger vehicles, pickups, vans, and trailers owned by the insured with GVWR up to 10,000 pounds. Reason A is not correct. Rental cars used for business purposes are excluded from non-owned coverage under the personal auto policy. Reason C is not correct. Vehicles with fewer than 4 wheels do not meet the policy definition of an automobile. Reason D is not correct. Vehicles exceeding the 10,000-pound GVWR limit are not eligible under the personal auto policy. Question 10. Under the North Carolina personal auto policy, which scenario describes a temporary substitute auto? A. A rental car used by the insured during vacation for business travel. B. A vehicle loaned to the insured while the covered auto is being repaired after a covered loss. C. A test drive vehicle provided by a dealership to evaluate a new model. D. A trailer towed behind the insured's vehicle for recreational use. The correct answer is B. A temporary substitute auto is any vehicle loaned, hired, or rented while a covered auto is out of service due to breakdown, repair, theft, or destruction, matching the scenario described. Reason A is not correct. Rental cars used for business travel are excluded from temporary substitute coverage. Reason C is not correct. Test drive vehicles are not defined as temporary substitute autos under the policy. Reason D is not correct. Trailers are not considered temporary substitute autos under the personal auto policy. Question 11. Under the North Carolina Personal Auto Policy's liability section, which individual is considered an insured? A. A person operating a rental car without the named insured's permission. B. A family member away at college driving their own car off the policy. C. An employee driving a non-owned vehicle during business operations. D. The named insured spouse residing in the same household while using a covered auto. The correct answer is D. The named insured spouse who resides in the same household is automatically an insured for liability when using any covered auto under the policy definitions. Reason A is not correct. Unauthorized operators of rental cars are not insured under the personal auto policy. Reason B is not correct. Family members using their own vehicles not listed as covered autos are not insured under the policy. Reason C is not correct. Employees using non-owned vehicles for business are excluded from liability coverage. Question 12. In the North Carolina Personal Auto Policy, which statement correctly distinguishes split limits from a combined single limit? A. Split limits apply only to bodily injury coverage, and property damage is excluded without a separate endorsement. B. Split limits include an aggregate limit for property damage, while a combined single limit sets per occurrence property limits. C. Split limits provide separate per person, per accident bodily injury limits, and a separate property damage limit, whereas a combined single limit applies one total liability limit per accident. D. Combined single limits divide coverage into separate per person, bodily injury, and property damage maximums. The correct answer is C. Split limits define separate maximums for per person, BI per accident BI and PD, while a combined single limit offers one unified liability limit for all damages in an accident. Reason A is not correct. Property damage is covered under split limits with its own designated limit. Reason B is not correct. Split limits do not include an aggregate property damage limit. Reason D is not correct. Combined single limits do not separate coverage types but provide one lump sum limit. Question 13. Under the North Carolina Personal Auto Policy, if an insured operates a vehicle in a state with higher mandatory liability limits than the policy limits, how does the policy respond? A. It requires the insured to purchase a separate endorsement for out-of-state compliance. B. It maintains only the policy's original limits regardless of the other state's laws. C. It decreases coverage to match the lower mandatory limits of the insured's home state. D. It automatically increases coverage to meet the higher state's financial responsibility requirements. The correct answer is D. The policy automatically extends to satisfy higher financial responsibility limits in another state, ensuring compliance without requiring additional endorsements. Reason A is not correct. No separate endorsement is needed. Out-of-state compliance is automatic. Reason B is not correct. The policy does adjust to meet higher mandatory limits in other states. Reason C is not correct. Coverage does not decrease when operating in a jurisdiction with higher limits. Question 14. During an unauthorized amateur race at a local track, Jamie's personal auto overturned and she sustained serious injuries. Under her NC personal auto policy's medical payments coverage, which of the following would be excluded from coverage? A. Injuries she suffered as a passenger in her friend's private vehicle after the accident. B. Medical expenses for a pedestrian struck by her insured vehicle before the race began. C. Injuries she sustained while using her vehicle in the unsanctioned race. D. Emergency treatment for injuries sustained while unloading personal belongings from her vehicle. The correct answer is C. The policy excludes medical payments for injuries sustained when the insured vehicle is used in organized racing or speed contests. All other listed injuries fall within covered uses or covered persons under medical payments coverage. Reason A is not correct. Injuries to a passenger in the insured's private vehicle after an accident would be covered under medical payments, since the vehicle was not used in racing. Reason B is not correct. Medical expenses for a pedestrian struck before the racing event would be covered as medical payments applies regardless of fault for covered auto accidents. Reason D is not correct. Emergency treatment for unloading personal belongings is covered because it involves a non-racing, non-business use of the insured vehicle. Question 15. After a collision, Sam's medical bills totaled $8,000. His health insurer paid $6,000 under his policy. Under Sam's NC personal auto policy medical payments coverage with a $10,000 limit, how will the medical payments carrier handle the remaining expenses? A. Wait for the health insurer to deny any further payments before reimbursing Sam. B. Pay the full $10,000 limit and then seek reimbursement from the health insurer for the $6,000. C. Pay only the $2,000 difference and decline recovery subrogation. D. Reduce its payment to match the health insurer's $6,000 contribution. The correct answer is B. Medical payments coverage in North Carolina is primary and pays up to its limits, regardless of other insurance. Then the carrier has the right to recover amounts paid beyond what the health insurer covered through subrogation. Reason A is not correct. Medical payments does not wait for denial. It pays regardless of other insurance and then seeks recovery. Reason C is not correct. The policy does not limit payment to only the difference. It pays up to the full limit before subrogation. Reason D is not correct. Medical payments is not secondary to health insurance and does not reduce to match the other insurer. Question 16. Maria carries the minimum required uninsured motorist coverage on her NC personal auto policy. Which of the following reflects the state's statutory minimum limits she must have? A. $15,000 per person or $30,000 per accident. B. $25,000 per person, $50,000 per accident. C. $30,000 per person, $60,000 per accident. D. $50,000 per person, $100,000 per accident. The correct answer is C. North Carolina law requires insurers to offer uninsured motorist coverage at limits of at least $30,000 per person and $60,000 per accident. Fewer limits would not satisfy the statutory minimum. Reason A is not correct. Limits of $15,000, $30,000 are below the statutory requirement in North Carolina. Reason B is not correct. Limits of $25,000, $50,000 are also below the state-mandated minimum. Reason D is not correct. Limits of $50,000, $100,000 exceed the minimum and are higher than the required statutory base. Question 17. Taylor lists two private passenger vehicles under her NC personal auto policy, each with a $50,000 to $100,000 limit. She did not purchase any additional endorsement. How much uninsured motorist coverage is available if she is injured by an uninsured driver in one vehicle? A. Coverage stacks to $100,000 per person, $200,000 per accident by default. B. No stacking. Coverage remains $50,000 per person, $100,000 per accident. C. Coverage automatically doubles only if vehicles are of different classes. D. Coverage increases to $75,000 per person. $150,000 per accident as prorated. The correct answer is B. North Carolina prohibits stacking of uninsured motorist limits across multiple vehicles unless an explicit stacking endorsement is purchased and additional premium paid. Without that, the limits remain per vehicle. Reason A is not correct. Stacking is not automatic in NC. It requires a specific endorsement and extra premium. Reason C is not correct. Vehicle class does not affect stacking. Stacking must be purchased regardless of classes. Reason D is not correct. There is no prorated increase feature. Unmanned stacking is not permitted by default. Question 18. Under the standard personal auto policy, which of the following losses is classified as an other than collision loss? A. Damage caused by a tree branch falling onto the vehicle. B. Damage resulting from the vehicle overturning on a snow-covered road. C. Damage incurred when the vehicle strikes a guardrail. D. Damage arising from the vehicle's engine seizing due to oil starvation. The correct answer is A. Other than collision coverage, comprehensive, includes losses from falling objects striking the vehicle. Collision coverage applies to upset or impact events. Reason B is not correct. Upset of the vehicle is covered under collision, not other than collision. Reason C is not correct. Impact with a guardrail is a collision loss, excluded from other than collision coverage. Reason D is not correct. Mechanical breakdown is specifically excluded from both collision and other than collision coverages. Question 19. Which of the following is expressly excluded under the physical damage coverages of the personal auto policy as wear and tear? A. Progressive deterioration of the brake pads from normal use. B. Fire damage from a vehicle engine compartment malfunction. C. Theft of the vehicle's audio system. D. Damage caused by the vehicle rolling onto its side. The correct answer is A. Physical damage coverages exclude losses due to wear and tear, deterioration, freezing, or mechanical breakdown. Other events like fire, theft, or overturn are covered under appropriate coverages. Reason B is not correct. Fire damage is covered under other than collision, comprehensive, not excluded as wear and tear. Reason C is not correct. Theft is covered by comprehensive, not excluded under physical damage, wear and tear. Reason D is not correct. Upset or overturn losses are covered under collision coverage, not categorized as wear and tear. Question 20. When aftermarket parts are used to repair a covered physical damage loss under the personal auto policy, the insurer's reimbursement is generally determined by A. Paying actual cash value without applying a betterment deduction. B. Reimbursing full replacement cost of OEM parts only. C. Covering only the cost difference between aftermarket and OEM parts. D. Paying actual cash value subject to depreciation and a betterment deduction. The correct answer is D. The insurer pays actual cash value for repairs using aftermarket parts, which includes depreciation and an additional betterment deduction to reflect increased longevity compared to worn parts. Reason A is not correct. Betterment deduction is applied so ACV is not paid without it. Reason B is not correct. Full replacement cost of OEM parts is not reimbursed under ACV coverage with aftermarket parts. Reason C is not correct. The insurer does not limit payment to the cost difference alone. Depreciation and betterment both apply to the entire repair cost. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.